Welcome to the Commercial Real Estate Investing from A to Z podcast, named one of the best commercial real estate podcasts by Business Insider. I'm your host, Steph Boldrini. We review all aspects of commercial real estate investing and bring the top people in the industry to share their best tips and lessons learned. And in today's episode, we are continuing our incredible conversation about SBA loans. And today we're covering SBA loans for construction. What are the terms? Can we refinance from a conventional loan into an SBA loan? Is there 100% financing available with an SBA? And is there a limit to how many SBA loans you can get? We are continuing our conversation with Mino, Senior Loan Officer at LiveOak Bank. Here we go.
And then for construction, these loans are even more attractive. We offer a 26-year term, 3 years of interest only. So the idea there is that you'll get 12 months for your construction process. Of course, we can extend it if it's a larger project, but then 2 more years of interest only for your lease-up period. And then we capitalize everything the project needs until it can pay its own bills. So in other words, we're going to give you an interest reserve account that will make your debt payments during construction when there's no income. And then we'll also figure out what the operating deficit is during the lease-up period, and we can include that in the loan. So it's a very all-encompassing loan. A lot of times when we talk about what people can qualify for, they don't realize that it's as easy to qualify for a construction loan as it is for an acquisition loan. I'm not saying it's easier to do a construction project. Definitely not. But you can qualify just as easily, and it really just comes down to, do you have that 10%? Because we're gonna give the project everything else it needs to get to stabilization.
Development is definitely not for the faint of heart. I'm doing my first one. If I was a guy, I would have no hair by now. So more power to the developers out there, especially in California.
Yes, it is challenging. Yes, California is definitely, I believe, the hardest state. I think I can fairly make that assessment. It's the hardest state to build in. You'll have less competition in the long run, but it is the hardest to get through entitlements.
Yes. I have a question. Can we refinance from a conventional into an SBA loan?
Yes. The rule is we have to be able to reduce your monthly payment by 10%.
Okay, cool.
Yes. So if you have, and if there's demand language in the original note, then it's also refinanceable. And if it's on an unreasonable term. So let's say you got a hard money loan and it was a 10-year note. Let's say it did have a low rate. I may not be able to improve your rate, but as long as the term of that loan wasn't appropriate for real estate, which SBA would say it wasn't, if it was 10 years versus 20 or 25 years, then that is totally refinanceable.
Amazing. And you also have a 100% financing option. Can you elaborate on that, please?
Yes, this is people's favorite thing to hear. So once you own a facility and you've owned it for 12 months, you can expand either via construction or via acquisition with no more money down. So the rules are, first of all, you have to have owned it for 12 months at least. If you're obtaining a 504 loan, they want you to own it for 24 months. But let's just stick with the 7A world right now. So after 12 months, as long as the ownership is going to match identically and makes
same
reasonable.
LLC. Sorry.
Yes.
Same LLC.
So you technically, if you're doing an acquisition, let's say you're buying the facility down the street, that facility, you can roll it into its own LLC. The ownership of the 2 LLCs now need to be identical, and they need to roll up to a parent company, so that it essentially is one company that owns now 2 LLCs, identical ownership, and the ownership can't have changed. So if you came to me and 6 months ago you bought out your partner, I would tell you, well, now we have to wait 12 months because it's going to be a 12-month look back, because that ownership needs to be the same. It needs to be reasonable, that you're sharing, branding, marketing resources, third-party management, all of those things. if it's an acquisition, and then SBA says that is technically an expansion. And then, of course, if you're adding on to an existing property, that's also an expansion. Again, after 12 months, we can do that expansion construction loan with no more money into the project. So that's a great way to utilize the SBA, take your project as far as it can go, build a portfolio with the least amount of money. And on the construction side, let's say you buy a 3 acre parcel. If you only want to build on the first acre, that's great. That would be your phase one. When you come back after 12 months to do phase two, same thing, we can do it with no more money into the deal. So phasing is a really nice way to, again, just extend how far your money is going to take you and build your storage portfolio.
So just to clarify on the ownership, each property LLC can be different so that so long as they are under the same LLC above them?
No,
Ah, okay.
nope.
They have
You
to
they
be
can you
exact
can
same.
They have to be exactly the same.
Okay.
Yes. So they can be in separate LLCs. And the way I like to talk about it is if you may want to sell one property before you sell the other, right? So it makes sense to hold them separately, but the ownership has to match. And then as they roll up into a parent company, obviously that ownership would match again.
Sorry. So then me as my name has to match on the LLC and whoever
Yes.
may be a partner. Oh,
Yes.
okay.
So if you're 50-50 on facility one, you need to be 50-50 with that same person on facility two.
Got it. Thank you. And
Mhm.
can we do a syndication on an SBA loan?
Yes. So there's a few things the SBA cares about. They want to feel really good that it's still owner occupied real estate. So it needs to make sense that the managing member, whoever's going to be on the debt, has oversight into the property. They want the majority stakeholders on the debt. And again, it goes back to, is this an owner occupied property or is it a passive real estate investment? So there's a gray line there. We kind of have to walk the line a little bit. And this is where you want to really work with somebody that understands the program and the intention of the program so that we don't trip any ineligibility rules. In general, any 20% or more owners of the new business need to guarantee the debt. If there are no 20% or more owners, then it's going to come back to who are the managing members, who is in control and making the decisions. And SBA wants those people on the debt.
Got it. Wow. Even though I've seen you present at our mastermind at least 10 times, I learned something new today.
Well, good.
Is there anything that we haven't covered about SBAs that you think is important for our audience to know?
Let's talk really briefly about the equity. How do we come up with this equity? So again, on the conventional side, you're probably looking 25 to 35% down. On the SBA side, anywhere from 10 to 15%, in some cases zero, but how can we source it? So cash is pretty obvious. Cash to us, cash to a bank is checking, savings, and stock accounts. So anything that you can easily liquidate. Typically, we don't look at long-term investments such as 401ks and IRAs as cash unless it's a rollover, or you have
Mhm.
access to it if you're of the age you can get to it penalty free. Seller notes can count as part of your equity injection. And
Wow.
there's some details there. So talk to your lender early if you want to try to use a seller note as part of your equity. Secured debt made to individual owners can count. So think about taking a HELOC out on a residence. That can absolutely be used to source your equity injection as long as we can see that you can pay it back personally, that you're not dependent on the new business to pay it back. Minority investors, we kind of already talked about. Gifted funds. All the SBA asks for is a notarized gift letter stating that it's a gift and not a loan. And then when you're talking about construction deal, if you own land, the value of that land can count towards your equity injection. And prepaid expenses. So if you go through the entitlement process, let's say you spend a couple $100,000 on permits, drawings, getting the property ready to build on, all of those prepaid expenses can count towards your equity. So there's,
Incredible.
mhm.
One of the many reasons why I love this country. If you cannot find a deal that fits on SBA, I don't know, you look harder because this is incredible, an incredible opportunity for people to get started or expand their business. not only in storage, but car wash, let's say, right? So long as you're
Absolutely.
operating the car wash, etc.
Absolutely.
Truly incredible. Can you just touch a little bit on the minimum and maximum amounts? How many SBA loans can I take, let's say?
Good question. So you can have as many SBA loans as you want. You are limited in your SBA guaranteed dollars. So the guaranteed portion, this is a little bit complicated, but I'll try to make it short and sweet. Your SBA guarantee on the 7A side is 75% of the total loan. On the 504 side, it's 35%. You can't have more than 5 million in SBA debt. So your loan is larger because the bank is coming in with a piece of it, but your maximum SBA exposure is 5 million. If once you hit that, you can actually move into a different loan program called a 504 Green program, and you can have unlimited of those loans. And then there was another piece of that question. Oh, so as many loans as you want, minimum loan amount. So it depends on the lender. You can do small express loans really for any amount. When it comes to commercial real estate and what we're doing with our self-storage loans, the minimum is 500,000, but there are banks out there that you can get a smaller loan through the SBA loan program. And then in
Incredible.
general, think total, we can really go up to like 20 million if we get creative.
Hmm. Wow, incredible. I hope some of our listeners get an SBA loan. Just let us know when you do. I wish everybody a ton of success. And that was incredible. Thank you so much for answering all of my questions. How can our listeners get in touch with you?
The best way to reach me is via email, and it's Anne, ANNE .mino, MINO at liveoak.bank. Really, all you need to do is shoot me an email and I send you a link to my calendar and we schedule a call. So it's that easy.
And as always, her email will be under show notes. And thank you so much for making the time. I really appreciate it.
Thanks, Stephanie. I appreciate you having me.
If you like what you have learned from us over the last 6 years of interviewing incredible people and think you may be interested in some of our deals coming up, make sure to sign up for our investor list at montecarlorei.com/investors. And I will see you next time.